Welcome back to the channel, guys. In this video, I will be breaking down the sales that I caught on gold that took 7 days to play out to my anticipated take profit. It's funny because I practically explained the setup in my previous video here on YouTube, and I will leave the link somewhere below in the description of this video so you can go watch and see for yourself. But then I thought to come on here and give a detailed explanation how I got in on both sell positions. Starting out with the weekly time frame very quickly, what I noticed was the fact that right here on my screen, gold is very clearly in a bearish market structure. As you can see, we had ourselves a high right about here, higher low, higher low, and then with this being the swing high, and then we had the shift in structure to bearish, and then we kept on printing lower highs and then lower lows right from that level. So having established the market's direction to the downside from the weekly time frame perspective, the very next thing I noticed on gold is the fact that we are traded back into a weekly key level right about here. Somewhere around the psychological one number 1940. Okay, let's stick with 1940 psychological one number. So guys, my network is acting up. So looking to the left at this very level, as you can see, right about here, when we tested the level from the downside, we had come right into the level with the level holding up as a resistance. Then we can see we had a huge sell-off from the level to the downside. And here we had a break above the level. We tested the level from the upside. Then we had a huge price rally to the upside. Right about here, the level held up as support. And then we're having to see a break below the level and then a retest of the level, rejection from the level, indicating that the level is likely acting right about here as a resistance. So previously broken support becomes a new resistance, coupled with the fact that we're having to see the candlesticks below the level, and then at the retest of the level, expected to act as a resistance, and then confirming the potency of this level is not only the fact we're having to see weak rejections off of the level, but then also a nice bearish momentum candlestick close from the level, signifying or indicating that the selling momentum has pretty much kicked back into the market. So we had this nice impulse move, and then this being a retracement where price had come back into this weekly key level, 1940 psychological round number, and then just in a bit to gather confluence at that level, introducing the fib retracement from previous swing highs right about here to the swing low. What then do I notice? I notice we are traded very nicely into the Fibonacci 50.0 reversal level. And then we have every one of these weak rejections trading off of the 61.8 Fibonacci golden reversal level. And then having to see the nice bearish momentum candlestick kick into the market, indicating that the pullback has most likely come to an end. And we would then likely see price head much further to the downside, with my anticipated take profit level somewhere around the previous weekly lows. Just very close to the negative 61.8 fib level. So clearly we've been able to establish from the weekly time frame that the market structure is bearish. And then we've had to see price after making this nice sell-off impulsive movement to the downside, retraced very nicely into this weekly key level, 1940 psychological round number. Looking to the left, we can see quite a number of times we've tested this level, and for every of the times we tested the level, we had to see price massively move in the opposite direction. And then we pretty much repeated the same thing right about here again. Not only did we retest psychological round number, retesting weekly key levels, we also retested the Fibonacci reversal level, 61.8 golden reversal level. And then we had a nice bearish momentum candlestick close, weekly candlestick close, signifying that the next impulsive leg to the downside has most likely kicked in, and then we would then see more selling pressure step right back into the market. And as soon as I had every one of these indications from the level to the downside, my identified level area of take profit was somewhere around the 1820 psychological number right about here, the previous weekly lows. And now this takes me down to the daily time frame. Then moving down to the daily time frame. We can see very clearly from the daily time frame also that the market structure is in a bearish condition. And just to quickly explain, you can see we had ourselves, this being the swing high, the daily swing high right about here, and then this being the higher low that led to this higher high. And then we had a nice daily double tops that led to the shift in structure from a bullish market structure to a bearish market structure. And pretty much from that point, we began seeing lower highs, lower low, lower high, and then a lower low right about here. With this being the swing high that led to the lower low right about here. So this is the higher low. This is the lower high rather that led to the lower low. And that goes to show that for as long as we stay below this level, from the daily time frame perspective, gold is considered to still be in a bearish market structure. So every one of the price actions in between the previous lower high level and this higher low, this lower low level is only but a complex pullback. We can only consider a shift in market structure from bearish condition to bullish on gold when once we have a break above this level. And by break, I mean a very full-bodied candlestick close above this level. As you can see, we did not manage to body close above the level right here. We had just the wick that tested the level and then ended up closing back below this lower high structured level, as you can see. So from the daily time frame perspective on gold, we are very clearly in a bearish market structure. So we have the weekly time frame in the bearish market structure. We have the daily time frame also in a bearish market structure. And then I quickly noticed from the daily time frame, price was testing a daily area of interest, a daily key level. Somewhere around 1925 price level, 1925. Yeah, we had ourselves a daily key level right about here. Owing to the fact that from the daily time frame, we have tested the level multiple number of times. And for every of the times price tested the level, we have had to see a significant movement to the opposite direction. Going further to explain that, you can see right about here, we had price tested the level from the downside. We had this nice rejection from the level, and then we had a sell-off. We had a break above the level, and then we had a retest of the level from the upside, with the level holding up as support right about here. And then we had come right back into the level, with the level holding up again as support. And right about here, when we were beneath the level held up as resistance. And here we had the level as support right about here. We had a break below the level and then a retest of the level with the level holding up as a resistance. We had come back nicely into the level and then we had a nice sell-off from the level with the level holding up again as a resistance. And then right about here, we had a break below the level and then a retest of the level with the level also again holding up as a resistance. And now you can see we are again back to the level. And then what then would you get to notice? We're having to see a nice daily bearish candlestick closing below the level like it did at this point. And then what would we expect? So just like we did right about this level where we had a break and then a retest of the level and then a price rally to the downside. Also, just like we had right about here, we had this nice break of the level, we had this retests, and then we had what followed was this nice sell-off to the downside. And then even if we look more to the left of the chart, just like we had ourselves also right about here, you can see we had a break below this level, and then we had a retest of the level, and then we had a sell-off from the level. Now you can see, guys, I'm not making this up. So for 3 consecutive occasions, right about here, we had a break, a retest of the level, and then we had a sell-off from the level. We had a break, a retest of the level with this weak retest right about here, and then we had a sell-off. And then also we have this right about here. So as soon as I saw the daily time frame, again closed below the level, what was I expecting? The very same thing that happened for 3 of the times we had done this. I was very much expecting that to happen again. So at the break of the level, I was pretty much waiting for price to come back and then retest the level to potentially have that sell-off back to the downside again. And then confirming the likelihood of this level holding is the fact that we are having to see a daily rejection from the level, daily rejection from 1925 psychological round number, daily rejection from the 50 exponential moving average. And this gives us clues that the level is most likely going to hold. And every selling opportunities from this level, even though I had my overall take profit targets at the weekly swing lows somewhere around the 1820 psychological number. Add also a level of concern from B. From the daily time frame, add the 1903 level as a level of concern. Owing to the fact that looking to the left of looking to the left of our chart, you get to see right about here when we had this sell-off from this level, where did we trade right into? But come right into this level, and then we turned to the upside. And then right about here, we had a sell-off. Where did we come into? This very same level. And then we headed back to the upside. Right about here, we had a sell-off from this level, and then we had come right into the 1903 level, and then we had price turned back again to the upside. So I pretty much was anticipating that upon selling from this level, we would likely come right into this level and then most likely repeat the very same thing we've been doing for every one of these previous occasions, head back to the upside, or better still, have a nice break below this level. And then once we are able to take out this level by seeing a daily candlestick close below the level, at the retest of this level, I would look to scale in for more sell positions. And then there would be nothing to stop us from getting to the weekly lows once the daily time frame presents us a candlestick close below this level of concern for me. And now this takes me down to the 4-hourly time frame. From the 4-hourly time frame, as you can see very obviously and very clearly, we are in a bearish market structure. So this is our daily key level. I mistakenly deleted that. And then back again to the 4-hourly time frame. You can see we add the 4-hourly time frame presenting us higher high and then higher low, higher high, and then higher low, with this being the higher low that led to the swing higher at about here. And then we had this nice sell-off that presented us a lower low and also confirming a shift in the market structure from bullish to bearish on the 4-hourly time frame perspective. And now we're having to see price present us a pullback to the upside. Now, guys, we have the daily time frames. We have the weekly time frame in the bearish market structure, the daily time frame in the bearish market structure, and then the 4-hourly time frame also in the bearish market structure. Having seen the majority of the time frames in sync, this makes this setup for me a higher probability setup. And guys, it's a no-brainer. There is no reason why I ought not to be looking to sell gold, having seen every of the time frames to the downside. And now this takes me down to the 1-hourly time frame from where I had my entry signal for sell. Having established the weekly, the daily, and 4-hourly time frames are all in a bearish market structure to the downside. And I was, without any doubt, convinced all I was looking from gold was selling opportunities. Moving down to the daily time frame, now this is our identified weekly. This is our identified daily key level, daily area of interest. And then from the hourly time frame, I quickly noticed the market structure was to the downside. So I had price presenting us lower high, right about here, lower low, and then a lower high, and then a lower low, with this being the lower high that led to the lower low. And then we had ourselves a shift in the market structure from bearish to a bullish market structure. And then we're having to see a higher low and then a higher high. So this for me, this gave me concern, owing to the fact that every of the other higher time frames were to the downside. But then coming down to the 1-hourly time frame, add the market structure to the upside in a bullish market structure. So this is where if for any reason I would consider selling gold, would be when once we have a shift in the market structure from bullish to bearish, and then very quickly identifying the last higher low level right at this point. Would be this level right about here. So we have that being the higher low that led to this higher high right about here. So for me, I would only consider selling gold when once I have the hourly time frame, the 1 hourly time frame structure back in sync with that of the other higher time frame. So when once I have a break below the higher low structure at about here, and then at the retest of this level, I then would consider selling gold, which had pretty much waited to happen before eventually getting my entry signal for sale. So also confirming that was the fact that from the early time frame, we had ourselves this nice hourly time frame structure level. Right about here, you can see when we're above this level, the level held up as support. While the break below the level right about here, the level held as resistance. And then right about here, resistance. While the break above the level, support. And then back to the level. So in as much as I have established from the higher time frames that gold is definitely going to head to the downside, I still cannot get in on sales right yet. Going to the fact that the early time frame is in a bullish market structure, and then also coupled with the fact that we're currently testing the early time frame key level, and then we could very much still see price do the same thing it did right about here. So as soon as we tapped into the level, we had price turns back to the upside. And then also here, we had price coming to the level and then turned back to the upside. So we could very much still see price upon this retest of the level, head back to the upside. I wasn't ready to deal with every one of those drawdowns. So certainly this also confirms why I was waiting for that break of this level, and then at the retest of this level, 1 hourly time frame structured level to get in on sales in line with the higher time frames bias. And then, as you can see, gold played out just as I had expected. And then here is where I had the confirmations. As you can see, we are having to see the shift in market structure from bullish to bearish. We're having to see a break below the 1 hourly time frame structure level. And now because we're below the level is expected to act as a resistance. And then also we are having to see a retest of 1925 psychological round number. We're having to see also price retesting the 50 exponential moving average from the downside expected to act, in this case, as a dynamic resistance. We're having to see price also retest the daily time frame key level. Guys, the confluences at play at this level, as you can see, are just too many. And having to see now the rejection candlestick from the level of interest, the daily time frame key level, the rejection candlestick from the 1 hourly time frame 50 exponential moving average, the rejection candlestick from the 1 hourly time frame structure level being a 1 hourly time frame key level. As you can see, we also add ourselves a 1 hourly time frame double tops with a break below the neckline, and then the retest of the neckline with the rejections from the 1 hourly time frame neckline of the double tops. Every of the indications pointed to the downside. And now I very much would have entered my sell trade as soon as I had this close, 1 hourly close right about here. But this would have given me a rather too big stop loss. So what I did was I set a sell limit pending order just at the 1925 level, 1925 psychological number level, and then with my stop loss at the 1928 level. So, like I said, the rejection from the level was very quick, and then we had this very huge 1 hourly time frame rejection candlestick, giving me a rather too big stop loss. So I had to come and set a sell limit order right at the level. At the 1925 price level was where I had my sell limit order. And this is where I sent out the signal to the Telegram channel. As you can see right about here, XAUSD gold, sell limit order, 1925, stop loss at the 1928 price level. And very quickly, our trade, our limit order was triggered. As you can see right about here, we had price come right back up, trigger the limit order, giving me a smaller stop loss on this. And then just a little bit of drawdown before eventually heading to the downside. As you can see, we had this huge sell-off to the downside, with price now moving in my anticipated direction. So I had my overall take profits at the weekly lows. Somewhere right about here. And then let's get to see how this played out. Now we had ourselves a nice break of this level. I had the majority of my trade closed at 1903 price level, and then I left a few positions to run to my overall weekly take profit level. Now taking this down to the daily time frame, you can see how we are body closed below this level of concern for me, being my first level take profit target, having this huge daily candlestick closing very bearish with a little wick. And now as soon as I saw this very bearish momentum candlestick close below this level with little to no rejection from the level, I knew for a fact I wanted to wait for a nice retest of this level and then scaling on yet another sell trade, because I knew having broken this level, there's nothing that's holding price from getting to the weekly lows right about here. And now this is where I went down to the lower time frames again to get in on the sales at the retest of that level. Yeah, I add my sell entry from the 15 minutes time frame. Yeah, I remember very clearly. From the 15 minutes time frame, I add my sell entry confirmation for the second position. So moving down to the 15 minutes time frame, this is where we had the daily candlestick close below this level, breaking the level of concern. And then, of course, you can see we had quickly retraced back into the level. For me, I had this being the 15 minutes time frame structured level. So as you can see, this was the lower high that led to the lower low right about here. And then we had the lower high, the lower low, and then we had quickly shifted structure back to a bullish structure, and then very quickly again to a bearish market structure. And as soon as I add this shift back to a bearish market structure, at the retest of that daily key level, yes, I add my entry confirmation for shorts. Just some minutes to London session open. At this 15 minutes time frame, weak rejection from 1903 psychological round number, daily key level. Previously, the level acted as a daily support and now holding up as a resistance. And then also coupled with the fact that we're having the rejections from the 15 minutes time frame exponential moving average 50. That gave me my entry signal for the second sell trade position right about here. With my stop loss just above this ice right about here. And then my take profit targets at the weekly, at the weekly lows. And as soon as I add my entry, you can see price immediately went in my direction. Now let's take this to the hourly time frame just to make this move faster. So here we are. I'm sorry for these drawings. And then we had price pretty much had a huge sell-off to the downside from that point. And then all the way to my take profit level with my first trade position securing in a 1 to 35 risk to reward. And then the second position, a 1 to 22 risk to reward, for a total of the first trade, a little over 900 pips. And then the second trade, 700 and something pips on that. Banking a total of 1,700 pips from both positions. Securing a 1 to 50 risks to reward. And you can see from the daily time frame, this had waited for 7 days to 1, 2, 3, 4, 5, 6, 7, for 7 days to get to my anticipated take profit level. Now, guys, you can see firsthand how trading is all about patience. Patience to wait for the right setups, and then patience to wait for your trades to play out as expected. Thanks for staying till the end of this video. Do subscribe to the channel for more valuable contents like this. And leave me your thoughts in the comment section. What do you think about this? See you in the next video, guys.